Yes, today is Monday, July 24th, and this is going to be my Monday Mortgage Minute today. I wanted to discuss the interest rates, how they're determined, and also the trends that we've seen and what to expect. Mortgage rates, like you'll hear like the Fed talking about how they may raise the rates a quarter and stuff like that. When the Fed raises those rates, it doesn't necessarily correlate exactly with what the 30-year fix does. That's just the rate that banks lend to each other. So with our rates, we look at more of the 30-year bonds, things like that, and those change every day. And you might want to talk to your clients about the fact that the rates that I tell them in the morning, if the bond market moves considerably during the day, we can see rate changes. We've seen rate changes where you can see 2 or 3 rate changes in a given morning. So if somebody drags their feet sometimes, they could lose their rate. Another important thing is when someone's quoting and when they're shopping around, it's not necessarily just the rate that's important. It's the overall closing cost, and that determines the APR, annual percentage rate. Someone may give you a rate of say 4.25 on a given day, and I tell them that my rate's 4.375. Well, mine may be at what's par, which means no discount points, whereas XYZ lender may give them 4.25, but they're charging them a point in discount, or they're charging them high processing and underwriting fees. So it's always good to get at what's called a loan cost estimate when you're shopping around, so that you know exactly what you're getting. I subscribe to a service that is a so-called expert, but there's no real experts in this, but I stay on the trends of where rates are going to be, where rates may go on a given day and week, and I get a Monday forecast. And today this guy has algorithms actually where he can see where rates have been, what the data is going to come out for the given week. The data that he's getting right now is saying that there's a 9 out of 10 chance that rates may slightly go up in the next week. So I think it's important that you work with a lender that actually does stay on top of that kind of stuff, because you want your clients to be totally taken care of and not just coming in blind. A lot of times they're going to ask you what rates are, what they're doing, what they're going to do, and I always tell them that I don't have that crystal ball. If I knew what rates were going to do and the bond market was going to do, I wouldn't be doing this for a living. I'd be trading bonds. Another thing that is interesting, and just a general rule of thumb, is where bonds are the main determining factor of where rates go. If the stock market's doing well, then rates might not be doing so well. And the difference is bonds are more of a secure commodity. So if the stock market's not doing well, people will go into bonds, and if the bonds are doing better, then our rates will do better. So I always tell people to root against the stock market when they're trying to get ready to lock. So that's pretty much what I wanted to touch on, is that it's important to shop around, understand what the true closing costs are when you're getting quoted a rate, and also to work with someone who actually does pay attention on a daily basis to what rates are doing and what they may be doing. And that's pretty much my Mortgage Minute. So I appreciate you paying attention to this. If you have any questions, my cell phone's 928-727-0257. Thank you. Oh, what's going on?